Yo, what's up everyone? Here is the next Trading Journal entry. Today I'm wearing a mic to see whether it improves the audio, because audio is key for our videos. So hopefully we sound a little bit better today. For today's Trading Journal review, I'm going to mostly go over breadth. I did a breadth study last night to see what the current breadth looks like, along with one other factor, and look at in the past what the this breadth indicator looked like, and then what the S&P 500 did shortly thereafter. I looked at it, I think, on a short-term time frame, and then a little bit longer one, about 2 years. And long story short, the way the breadth indicator, what the breadth indicator is signaling is that there is probably some good gains for the next 2 years, and coupled with a few other factors like the pre-election and election cycle that we are currently in, all of those things are looking really good. So it's like the stars are aligning for a potentially really good year. So that's my bullish sentiment right now. It looks like online on Twitter, for instance, there's people questioning the rally, like, where are the bidders, who's buying? A lot of naysayers or sort of disbelievers, and then there are people who flipped, went from bears to bulls, and then there's the perma bulls, which are obviously plentiful right now too. So hopefully we have time to go over that. I am limited to 15 minutes, so we'll see. But anyways, let's dive in and look at the indicator here. Okay, so that wonderful indicator that I keep talking about is the US highs and US lows cumulative 5-day total. And this can give us a good indication of what US stocks are doing. Are most of them rising, or are most of them coming down? What is happening? I think that at the end of the day is probably one of the best indicators of the sentiment of the overall breadth of the market. So okay, let's go in. So here we are. This is the US highs and lows, and this is a 3-year chart. So going back 3 years, how do we look? Okay, so the biggest thing that I've marked right now is the basically 100 line. Let me get my cursor out here. Yeah, I think it's around the 100 line, where you could see whether the trend has sort of broken or it's revamping up. And then at the top, I've got the S&P 500 mark with the 26-day moving average. What we're seeing right now is the S&P 500 moving up past its moving average, bullish sign. Medium-term trend is pretty good, and this will develop into a longer-term trend of bullishness or rising if on the weeklies it looks the same. Then below the 5-day total of the US highs and lows has thrusted up from basically December 23rd till now. There's been this large move up. That is a really good sign historically, based on the study that I did over here last night, crunching some numbers. It all looks really good. I don't think I have a one that goes back further. One of the really good signals or patterns that I've seen is this one here, where you see a bottoming in the high-low index. So May saw the most amount of lows. I think everything was sort of crashing, falling. Sentiment was really bad too. And then you had another one in October, end of September, but it was a little less. So that we would call a positive divergence, meaning that things are getting better. And if you look up here, you see that was the bottom in the S&P 500 going back 5 months here. Okay, let's go to the next one. Here's a monthly look. Okay, this chart's way too big. I was on my other monitor yesterday at home. Okay, so here's one that's going back 30 years, and this is what I used as my study to see what the S&P 500 was doing shortly after a thrust. There's a lot of chat about thrust happening, and that's what we see right here. It went from this blue line all the way up to the zero line. What's the blue line? The blue line, I basically arbitrarily drew this because from my eye, there seems to be most of the action is between up here and down here. We see some washouts below the blue line. You can see the massive swings down, but then after above that region is sort of kind of just hanging out here. You don't have too many long drawouts of this indicator. So I think what I did was I looked from where it touched here and then it thrusted back up to the zero line. For instance, what's a good one right here? Lo and behold, it's March 2009, and we all know what happened then. The S&P 500 continued its massive bull run, arguably still going on. And then we looked at over here, September 2015, and so on and so forth. So instead of looking at this chart, I'll read off some of the numbers here. So in October 2002, the S&P, when we had that crossover from negative 300 to the zero line, there was a 3% rally in the S&P 500 in September 2002. 2 years later, the S&P 500 produced a 27% return approximately. March 09, 2 years later, when you had that same movement, the S&P 500 was up 67%. October 2011, same movement, negative 300 to zero line. 2 years later, the S&P 500 was up 40%. October 2015, 2 years later, up 23%. January 19th, 2 years later, 37% up, S&P 500. And March 20th, 2 years later, you had a 74% increase. So all across the board, you're seeing a strong move up. So I think there's wide breadth in the market, not just in the United States like this indicator, but all across the world. Europe, Asia, as well are experiencing similar technical improvement. So that's this indicator and its importance for long-term performance in the market. Here's a weekly look of the same indicator, kind of drawn a line here at the negative 100, and you'll see that it's corresponding with price. Here you can see the indicator falls back, so does the S&P 500. Similarly here in May 2002 and August 2022, you see the indicator come up and then fail again along with price. Okay, so this is a bullish development. I sound like a broken record, but there's a lot of bullish sentiment to that we will see. Anecdotally, is that how you say it? There is bullish sentiment around. I think it kind of flipped. It went from really bad in September, October, and December to now all of a sudden very positive. And I think it's a seasonal thing personally. So see how that goes. What else do we have? This is a cumulative look. This is a little bit more conservative view based on my last look of the same indicator. It's technically not fully out of the woods yet, but down here we're seeing massive improvement. So you need to have, I think, exposure to the market. The fear that I personally have is not having enough exposure, because last week I got stopped out, unfortunately, but I've re-entered in because of the bullish sentiment. I am personally looking to accumulate more this month because the history is suggesting that the remainder of this year should be pretty good. So I think it'll be will require a little bit more time, attention, and patience, which will be a really fine balance, is not having FOMO and getting a good entry. Yeah, so you're seeing a bottoming here. You see the divergence there clearly. So that was the bottom. 26-week moving average. Dr. Alexander Edler likes the 26 and the 40. So on the 26, we're seeing a breakout. It should remain bullish here. We're just going to stick to rules. This is 2002, 2003 bottoming period. Here you'll see same thing. You'll see the indicator moving from down here upwards to here, and you'll see price above going from up to down, and that was again a bottoming process. So you see the thrust out, and then it continued. We might have another pullback because it was sloping. How's this 26 looking? Flat, the downward bias, like we could have another pullback down to 3,800 maybe. Yeah, right now the S&P is at 4,100. I think we could maybe get back down to 39, 38. That was the magical level before. Okay, couple more minutes to go. Let's get to the other indicator that I put on here on my study last night. It's important to study. It's the amount of time that you put into practice that lets game time be easier, right? That's so they say. So then I looked at when the when the US highs and lows list was at the 0 line at the top, and then we had the 50-day moving average. Where was that? And basically all the readings are at 85% of stocks are above their 50-day moving average. So if I can find you one here, we can sort of confirm that together. Where are we? I might not find it in time here. Here? Yeah, why not? Like, this is kind of messy. I've got it plotted with the 50 and the 200-day moving average, how many stocks are above. So 81% of stocks are above their 50-day moving average. So that's a 2% lower than yesterday on a monthly basis, but maybe my data there was wrong. And then on the 200, we're at 71. So a lot of bullishness there. But going back to 2003, there's really good performance in the S&P 500. Okay, so that's my trading journal. For today, we just stuck on breadth. I think it's really important to look at breadth, because it can give us a sense of what the market is doing. Oh shoot, there goes the mic. I think if you have strong breadth, that makes you feel a little bit more confident that, you know, the stock that you're going to pick is going to work out. Yeah, so it gives you a lot of confidence that way. Again, you want to probably just, if you're not too sure what stock to buy, I would say you want to look at the top 10 in the S&P 500 and buy those. That's easier if you want single stock risk, or you just continue to buy the ETF. If you want to break it down, you can go by subsector. Okay, hopefully you found that a little bit informative, or not at all. Who cares? See you on the next one, guys.